Your Swag Academy gang, we are in the building, and I got my microphone in the camera. You see what happens when Austin's not here. Nobody is here to direct me. So, since the last time I posted a video on YouTube, I've probably posted maybe 10 or 11 new videos in the Academy because we have this whole plan to, reconstruct it, design it, do the whole website over, do every single video over, but all in detail with this new setup, because you're about to watch a Candlestick video right now of me going off for 40, 50 minutes, an hour long, and that is how long these new videos are. And I'm in the mood, in the spirit, to just create longer videos because it's a lot easier for everybody to digest it and see the value in it all and put it all together in one video, as opposed to 5 small videos that's 9 minutes each, and I'm just not in that phase anymore. You know what I mean? So if you want to be a part of the Academy before the new Academy is done in the next few weeks and see the new videos that's coming out daily, it is www.theswagacademy.com, and it's not like it's a seasonal pass. Once you're in for life. On another note, candlestick trading, and I'm excited to make this video because a lot of people, have been seeing me trade and analyze the market and make YouTube videos and talk about the market for a good amount of time, but I don't think I had a dedicated video just on candlesticks on YouTube yet. I don't think so. And people have been asking me for it. So this video is strictly talking about candlesticks. So make sure you sit back, you have your notes out, you do whatever you can do just to try to learn some type of information from this video. My goal at the end of this video is for you guys to at least gain 1% of knowledge from this video. If you guys watch the whole video and the entire thing was full of value and you learned so much, great. But I don't want you to watch this video that's an hour long and you receive 0 type of value. That's not what I want. If I can at least help you some way, shape, or form, I did my job and I can be happy with myself. So without further ado, let me stop talking and let's get right into the video. So when it comes to candlestick trading, I have a lot of notes written down that I want to go, over you guys step by step by step. And then I have a lot of examples to show you guys as well. Before I start this video, I want you guys to know that this is my experience. This is my opinion. What works for me may not work for you, and what works for me may work for you. The goal is for you guys to create your own foundation, but get some inspiration from, a trader like me or another trader out there, and put your overall foundation together. So this is how I interpret candlestick trading and candlesticks as a whole. And before I get into, everything else, because if you can look at the little time, the length of the video below, you see it's a very long video. But the first 2 to 3 minutes, just like I did with the moving average video, I want to talk about it for beginners, just in case somebody's watching my video and has no idea what it is. But just give me 2-3 minutes of your time. For those who already know the open, the high, the low, the close, just give me 3 minutes of your time. And then the rest of the video is just all my notes and me diving into the market and just giving you guys some examples and some value for your own overall trading and experience. Again, I just want to be on this part for, 2 or 3 minutes. I'm going to, go through this fairly quickly because I really want to be on the charts and I really want to be on my notes because a lot of those has maybe some points that you guys have never heard before. But as far as candlesticks, this is what we use to read the markets, what we use for technical analysis. So if we see something like this, which is essentially how a candlestick will look, we'll just got to get used to this if you're a beginner, right? This is called the wick, the little lines on the top and the bottom, and this is called the body, right? Just keep that in your mind. Now, if it's red, just like it is right now, up here is the open, where price opened. Right here is the close. Right here is the lowest point price went to. This lower wick is the lowest point price went to. And this higher wick is the high price went to. I drew that on wrong a little bit, but yeah, so let me, if I could just delete this and kind of give you guys an example. Open, high, low, close. What you'll see is that the market will like open right here, right? And then it'll come down all the way down here. It's all body, right? But the minute the market comes up here, because if you're looking at a 15-minute time frame, one candlestick represents 15 minutes. If you can look at the chart really quick, again, like I said, just give me 2 or 3 minutes of your time if you're a beginner trader. If you're a more advanced and intermediate trader, because I'm going to get to everything overall. Just give me 2 more minutes. So if you see this right here, I'm on a 4-hour time frame. This represents 4 hours, this represents 4 hours, this represents 4 hours, right? So if I can go to my notes, you will see, it'll be all body, but the minute, price has to come back up and like trade around this level, it'll be like this. but it'll have this wick because it'll show you the trail of where price went to. Just like if price goes way up here and then it comes back down and goes right in there, it'll look like this. It'll have that wick from the bottom and that wick from the top. Now, if it's green, it's the exact opposite, right? You may see something along this line where it's just like this. And what this means is it opened down here, it closed up here. This is the highest point price went to, and this is the lowest point price went to. And the reason why I'm breaking it down on a basic level is because I need you guys to understand and pay attention to the body and the wicks of these candlesticks. People just look at the overall candlestick and not even pay attention to how big the wicks are or how much the body is in comparison to the wicks. And that's actually one of my notes that I have later in here. But I want to break it down in the most simple format so you guys can easily understand it and easily digest it. So keep this all in your mind. If a candle ends up being red, that means it opened up here. Oh, I just erased it. Sorry, guys. That means it opened up here, right? And it closed down here, right? And if a candle is green, that means it opened down here and closed up here. The high and the low remain the same no matter what. It's just the open and close flips depending on the color of the candlestick and if it's bearish or bullish. Now, to the notes, my first note and first overall rule when it comes to myself is you don't need to look at every single candlestick at every single time frame. Every second of the day. It's irrelevant. And this is one of the issues that I had when I first started trading in 2015 and looking at the market. Like, I would be so obsessed with looking at a 1 minute and a 5 minute time frame and just looking at it and, okay, it did this, and what is this candle, and then what is this candlestick, and what is this pattern. I thought everything had to be a pattern, and I was so locked in on what the market was doing on a 5 minute time frame, even a 15-minute time frame, that my bias would, sway, 15 minutes and then come back down and then come back up and come back down. Like, my bias would switch because I'm looking and trying to trade on a 15-minute time frame. And you guys got to keep in your mind, which is what I realized, is that the market is open 24 hours a day, 5 days a week. So no matter if you're bullish or bearish, the market has to present candles in both directions. So for example, I can actually go right back to my notes for a second, right? And even delete all of this. Right, let me just delete all of this and then go back to actually creating. And look at this. So if you're looking at the market and it's going up, it's not going to just do this all day. It's not. Like, and this, obviously this line for beginners is represented by a bunch of candles. Like, the market is not going to just go straight up and then that's it. It's going to go up and then down, and then up and then down, and then up and then down, creating higher highs and higher lows, or lower highs and lower lows in a downtrend, just like you just see what it is on this chart. It went down, then it went up, and then it went down. So if it's a downtrend, it'll go down a lot more than the retracement will come back up. You know what I mean? So we're looking at this. Understand the market has to present a bunch of candles to create the overall structure. I say all that to say, just like I had in my notes, people will look at a 5 minute time frame and a 15-minute time frame and see this right here, right? They'll see this and price coming down and all of a sudden think it's a reversal because they saw one candlestick pattern that's like a shooting star, you know what I mean, right here. And it's deleting again. Sorry, guys. But they'll see a shooting star right here, and all of a sudden they're like, oh, price is going down. And it's like, no, the market is reversing. Don't get too caught up in, every single candlestick, every single second. That's one of the first rules that I have when it comes to my own trading that I had to realize over the course of years is do not get caught up in every single candlestick. And I have a note in here that tells you exactly where I only look for candlesticks, but we'll get to that in a second. Again, next thing is, for me, looking at candlesticks in the middle of nowhere does absolutely nothing for me. It's not necessary. Just like I said above, price has to retrace. So I mainly pay attention to candlesticks when it's near a psychological level or a trend line. That is it. I even have notes over here that says, clear as day, should be right here, right here. Again, I'm only looking for one thing when it comes to candlesticks: seeing what it does on a major area, a psychological level, a trend line, or a Fibonacci retracement for entries and exits. That is it. And people, may wonder why. It's because when you're looking at price in the middle of nowhere, it's already made its move. Like, you're just a little bit late to the party. So for me, if I look at the market and I see, let's say for instance, how I trade in like levels, psychological levels, right? If price is in the middle of those levels and it's already moving up or already moving down, I'm not looking to enter. I'm just going to wait until it gets to the levels And then I'm looking to enter and see what candlestick price will, print on it. So if I can go to my examples really quick, I'm gonna keep my face off just so I can show you guys an example really quick. But if you look at this, this is kind of in the middle of nowhere, and like over here is kind of the middle of nowhere. Like if I see price already moving that much and that far, I'm not going to get in, you know what I mean? Because it's already moving. All I'm looking for is what price does at these levels. Like, what is it doing at this cycle level? 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 The mid level, you know what I mean? Like, this is what I'm looking for overall when it comes to the market and seeing how it prints, right? So you can see right here, price bullish engulfing, right on the psychological level, and then it goes all the way up, right? Same over here. If I can delete that big line I just created, price at this psychological level, nice morning star, excuse me, nice morning star, right? Where does it do? Go all the way up, right? Same with over here. What does price do? Tweezer bottom, followed by a momentum candle, and then where does it go? All the way up, right? Same with over here, consolidation, right? And then price prints all the way out. I would consider this more of a hammer, but it does so, and then it goes up. So I'm looking for these actual patterns overall at these psychological levels. I'm not looking at it in the middle of nowhere, because if it's in the middle of nowhere, that means it's already in the middle of a trend. I'm not trying to get into the market during a trend. Candlestick patterns are a main confluence with me, but in my opinion, they're nothing without support and resistance. Support and resistance, I've said this time and time again, is the number one, most important thing when it comes to, technical analysis, because it tells you exactly where price stopped in the past and where it can potentially stop in the future. You know what I mean? Candlesticks don't necessarily tell you where it's going to stop. It gives you the example of it stopping. Like, it shows you the sign of it stopping, because it'll print a shooting star at a resistance or a bullish engulfing at the bottom. And again, I just wanted to do the first 2 minutes for beginners, but now, right now, this is not necessarily for, somebody who knows absolutely nothing about candlesticks. I'm going to have more videos out here that break down exactly a shooting star and exactly a hammer and exactly a bullish engulfing, later on, especially in the new academy. But right now, the goal is to go through all of my notes for those who have been trading, or at least reading upon the market, even if they haven't placed a trade yet, and understand, candlesticks at its basic level. Now, when it comes to these psychological levels, I don't care if it's a single, double, or triple candlestick formation. You know how a single is like a hammer or a shooting star or even a doji, right? I'm not necessarily worried about that. Or if it's a tweezer bottom or a tweezer top or a bullish engulfing or a bearish engulfing or head and shoulders or inverted head and shoulders, I'm not necessarily worried if it's a single, double, or triple candlestick formation. If I see some type of formation printed on a psychological level, or a trend line, or a Fibonacci retracement mixed with another type of confluence like a moving average, crossover, whatever type of indicator you guys use, that's enough of a confirmation for me to get in, period. I only need 3 confirmations for me to get in, and that's enough for me right there. Like, a lot of guys will anticipate a evening star being created at the next resistance, and it's like, you can't anticipate that. You can't. All you can do is react to the market. You can't just be like, this is what's going to happen at this level. You have to look at the overall grand scheme of things. When it comes to candlesticks, you can do that in terms of analysis. Like, you can be like, oh, I think price is going to get to 1.40 and then reverse. You can do that, but you can't say, I think price is going to get to 1.40 and it's going to present an evening star, and then you can't do that, because you may get a bearish engulfing and then just wait for that evening star to be created, and it never creates and it just drops and you missed your entry. So you can analyze where price may go in the future, but candlesticks, you have to literally see what candlestick is being created. So keep that in your mind when it comes to candlesticks. Now, candlesticks also give you the confirmation you're looking for. Pay attention to them, because I like to find a confirmation on a higher time frame. And the reason being is that it tells me where price is going to head, for the next few weeks. So if price is nearing a psychological level and it presents one form of a candlestick on a 15-minute time frame, I'm not putting too much emphasis on it, like, unless it creates overall structure. So what I mean by that is, when price is getting near a level and it's on a higher time frame, like a 1 hour or a 2 hour, and I see a bearish engulfing at a resistance, like a bearish engulfing, and it's coming down, that tells me exactly what price is going to do for the next few days. And if I see that on a 4 hour or a daily, that's going to tell me what price is going to do for the next week or week and a half. And it's just like I said in my other videos when it comes to Fibonacci retracement and moving average and my entries, I'm more of a trader who likes to know the grand scheme of things, like what price is going to do for the next 2 weeks, and then try to trade in that direction for those 2 weeks. Not necessarily that I'm gonna hold it for 2 weeks straight. I can, sometimes I do, but that's not necessarily what I'm saying. What I'm saying is if I know price is going up for the next 2 weeks because the weekly candles is showing that the next 2 or 3 weeks it's going to get to this level, I'm going to only look for buys. And if price is retracing, that is only just counter trends for me to look for more entries. That's it. So keep that in your mind. I don't want that to go over your head. If I know price for the next 4 days, week, 2 weeks is going to this level, like from 1.76 to 1.80, it's going to get there, 400 pips. It's not going to get 400 pips in a day or in 2 days. And it's not going to get there straight, it's not going to just get there straight up. What it's going to do is go up 100 pips, come down 40, go up 50 pips, come down 20, go up 70 pips, come down 30. And every time it does that, come down 20 or comes down 40 or comes down 50, I'm not trading, the retracement down. I'm looking for, to get in on those counter trends. And how do we get in on those counter trends? Understanding candlesticks, because when price is retracing, and I think I should go to my notes for a second to kind of give you guys a clear example of what I'm talking about. This is the last thing we just had on. Let me delete this, and then let me put my face up here. Sorry, this freaking tool that's on my desk using to fix something yesterday. Anyway, if price is going right, if price is right here, right? And you guys can't even see it because my face is in the way, but if price is right here and it's going up here, right? It's not just going to do this, just like I said earlier. What it's going to do, and what you guys should understand and embrace instead of wondering why price is retracing and think it's going against you, is price is going to do this and this and this and this and this and this and this, and then boom, it's there. And chances are these places, I'm deleting it again, there we go. These places that it's stopping at are usually psychological levels or the mid-level, something of the sort. So when it comes and retraces at these levels, the reason candlesticks are important is because the psychological level is just holding it firm for us. That's all it's doing. It's holding it firm and saying it's not going to get, lower than this anymore, right? It's not going to get lower than that anymore. So now that we know price is actually rejecting this level, what are we looking for? We're looking for some type of bullish formation that tells us that price is going to head all the way back up. And if we get that, some type of bullish engulfing or a hammer or even a morning star, I'm entering because we already have all the confirmations in the world. We already know that price wants to get to this level. And the reason we know that is because of our analysis of the market. Understand that the market is all perspective, it's all opinion based, so there's no guarantee that it's going to get to this level. But using all the confluences and all the things that we've learned in the past, we can analyze and predict that price will get there. And that's all the market is. The market is just speculating. And I've said this time and time again, nothing is 100% guaranteed when it comes to this market. Not my strategy, not y'all's strategy, not somebody else's strategy. It's like nothing is 100% guaranteed. All we're doing is speculating. Like, yeah, some traders may be better than other traders, or and you guys may think it's the overall strategy, but it's not necessarily that. It's more so them understanding the market, understanding the cycles, understanding the legs of the market, understanding their psychology, understanding the risk management associated with it all, understanding the fundamental announcements that's coming out and making sure you're not trading around those times because it can easily stop and wick you out. It's understanding, all of it. But all we're doing is speculating and predicting where price is going to go based on what it did in the past. So knowing that, all we can do is be confident in our bias. That's all we can do. Like, there's nothing that's surefire, and that's one of the notes that it's probably like a life trading note. Like, forget candlesticks for a second. It's more of like a life trading note. Is nothing is guaranteed in this market, but if you have several confluences, be confident in your trade. Period. If you lose, you lose. But you didn't just get in a trade for no reason. You accurately named and pinpointed 4 different reasons why the market is going to go up. So in my opinion, if you have 3 or 4 confluences every single time, it's hard to just see that you're just going to lose 10, 20, 30 trades in a row when you're showing that it's calculated risk and it's not so much I'm just getting in for no reason. So if I can go back to my overall charts, people may say, oh, is that enough of a reason for you to get in? Yes. Any type of, this is why I keep the psychological levels on and my MAs on sometime, but any type of bullish candlestick formation at these levels, I'm getting in. Same with over here, any type that's strong enough and not on like a 1 minute time frame, but that's strong enough, I'm getting in. Same with over here, I'm getting in. And I may lose some trades, but I'm confident that I'll win more trades than I lose if I keep my overall discipline and my overall strategy, which is if I see a bullish, engulfing. And a bullish engulfing obviously can be something along these lines, right? We may see something like, price doing this. Actually, let me do it a little bit lower, right? Let's say this was the resistance level. I'm gonna show you guys on the charts in a second. That's the resistance level, right? And price does this, and it's a body, and it comes down, boom, and it does this right here, right? And if I see this, right, price do, since it closed down here, remember, I'm gonna actually get a blue one, right? It closed right here because it's a red candlestick, right? So that means that the next candlestick has to open right there. Let me just draw that back on because I erased it by accident. There we go. So it opens here, right? And it comes and wicks down here. But if I see this, right? This is ugly, but who cares? Right on a key level like this, I'm looking to get in, period, because chances are the MA is done, crossed over. It did this on a psychological level. I don't see price doing this and then opening right here and then coming all the way back down. I don't see that. You know what I mean? Price is not going to, and I want you guys to keep this in your mind as well and hopefully keep this in your notes. Price is not going to do random things at random points in time. Everything is impactful and purposeful and for a reason. People who are trading, and you guys should understand what the market is people just buying or selling. So if you see this on this psychological level, chances are a million other traders see the same thing, and they're going to try to force price, higher and higher. So it closed here, it opens it. Oh, this is red, sorry. If I can make it green for a second. It opens here, maybe wick down here, then it goes higher, right? Boom. And then does the same thing, right? Wicked again, then it goes higher, but it actually closes, down here, higher, boom. And then we start getting some, closes here, boom, retracement, right? And then boom, retracement. And some guys may think, guys or girls, right? They may think that, oh, price is reversing when it's not really, it's just retracing. Here you can easily get a Fibonacci level, right? Fibonacci level, whether it's, 38.2, 50, 61, well, it's actually the opposite, right? This would be 38.2, this would be 50, this would be 61.8, and then it reverses, and we're looking for the exact same thing going forward, right? If price is just retracing, we still are in our first trade, but we're not looking to get out or get scared. It's just simply retracing. And then we start to see this, right? We got this candlestick, and then we got this regular doji, right? Nice little doji. And then we got this exact candlestick right here, over here. And what is this? A morning star, right? A red candlestick, a doji, and then a green candlestick that's kind of the same in length. And now we're looking to get back in because we have a morning star at the 50% retracement level, and chances are the MAs uncrossed over. We know the overall move of the market is to get up here, right? So we're looking to get in, and then price does the same thing. Boom, body, boom, and then it goes all the way to here. So I want you guys to understand that price has to retrace. It's not just going to, let me just show my face for a second. Just like I said in my first overall rule, price is not just going to just drop all the way down and just drop all the way, unless it's some type of fundamental announcement like pushing it. It's not just going to, drop 1,000 pips and make it as simple as that. It's going to have some retracement. And even if you see it on a daily time frame where price just dropped overall, chances are if you're an intraday trader and you're on a 15-minute time frame, that daily, confirmation is 24 hours. one candlestick on a 15-minute time frame is 15 minutes. So you need 4 represented to represent an hour, and then 24, I believe, times 4, 20, 40, 60, 80. So 96. Basically, you need 96 15-minute, candlesticks to represent one daily candlestick. So if I can just show that on the actual chart really quick, and then I'm going to get to the actual overall trading view charts. I want you guys to keep this in your mind, how important this is overall, right? Like, I'm trying to break it down as simple as possible for you guys, but there's just little notes and gems that I'm throwing out there that I need you guys to really keep in your mind and understand, right? If you know that, sorry, I'm bringing my iPad down. If you know that 96 15-minute, candles represent one daily candle, right? Chances are those 96 15-minute candles are going to do boom, 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 like some crazy stuff, because that overall daily, it's just going to look as simple as this, whether it's green or red. Simple as that. So keep that in your mind. Like, when you look at a 15-minute, candlestick and you see it moving around and around, don't be swayed by where price is heading or where the direction is going, because overall it still has to create that structure for that 4-hour time frame or that daily time frame, if that makes sense. So just like I said in my notes before I got into the examples, I like to find the confirmation on the higher time frames, because it tells me more of a story than the lower time frames can when it goes to the overall direction. Because once you know the overall direction, it's easy to get in a few times on a 15-minute time frame or hourly time frame, but just find the overall direction on a higher time frame. Don't find that on a lower time frame. So if I can go to my overall charts, if you look over here with AUD USD, you can see clear as day that we had a tweezer top right at 0.80, right? So understand that we didn't have that over here. We didn't have a tweezer top right at 0.79 or even a tweezer top right at 0.78. What did the price do? Bulldoze right above it. What did the price do? Get there, no type of candlestick whatsoever. Like, these are not a pattern. This is a pattern, like a clear-cut pattern, tweezer top. Like, when two bodies are the exact same in a sense, but just different, colors, one's bullish, one's bearish, or one's bearish, one's bullish, that's an actual candlestick formation. So knowing that, now we know that potentially price could be reversing at least to 0.79 on the next psychological level. We wouldn't know it would get this far until we've seen this candlestick. Like, you see how much of a shooting star this is and how much momentum this has? We know if it has this much momentum and it's super close near a psychological level, it's not just gonna stop right here. Like, it's gonna bulldoze through. But just to get in from 0.80 to 0.79, this tweezer top is all we need for us to give us a sign for us to scale down to a 15-minute time frame, right? And look for structure there, right? Go to 0.80. And that tweezer, actually, I gotta go back to the far to see exactly where the tweezer top stopped at. It stopped at 0.79730, right? So if we go to the 15-minute time frame and we look for that, right? 0.79730, which is around right here, right? So it's around right here. So there's two ways you could have gotten in. Let me throw my MAs on for a second, right? You could have gotten in right here at that 0.79, excuse me, at that 0.79730 level, which is a bearish engulfing on a 15-minute time frame, but the tweezer top overall came down, created a lower high. Look at this, lower high, right? This high is lower than that high. So you got all the confluences in the world after you saw that tweezer top, right? You saw the tweezer top on a 4-hour time frame. So you scale down and you see what happened for a price to create that exact tweezer top. Oh, price just gave us a bearish engulfing on a 15-minute time frame and then came down and created more structure, created a lower high, and then boom, now we're here for the end of the tweezer top. Great. It's okay to enter, right? Enter right here. Your stop loss is a few pips above here or even above here to be safe. And guess where it goes? It goes all the way to 0.79. And that's when you can go back to the 4-hour time frame to see overall what is price doing. Oh, candlesticks gave us a shooting star. Boom, call it out, right? If I can get a call out tool, yeah, right? Shooting star. Boom, minimize, take that out. We have a shooting star right here, right? That's telling us that price, how I trade when it comes to psychological levels, is going to break past this 0.79 level and at least get to 0.78. Like, I trade in terms of levels. If you guys trade differently, that's okay. But what I want you guys to really focus on is pay attention wherever your support and resistance is, at. Pay attention to what these candlesticks are printing near these levels. Like, that's one of the biggest values and keys to this video. What candlesticks are being printed near these psychological levels, period. End of story. Like, I'm not looking for it in the middle of nowhere. I'm looking for it as a confirmation that price is going to reverse, or it's more of a confirmation that it's going to continue. Once I get that confirmation, which brings me to my next note, you know what I mean? It says that people who enter on a 15-minute time frame, and that's okay, but just make sure you have a bunch of confluences to go with that. So for me, I'm not looking on a 15-minute time frame right when price is at a psychological level, because it's easy to get faked out. You don't know that price is going to reverse there. I need that confirmation on a 2-hour or a 4-hour time frame. Once I get that, then I can scale down to a 15-minute time frame and see the structure being created, try to find a candlestick pattern after that. And I find it, valuable, and I can actually even write it down right here. I find it valuable, right, to find a candlestick pattern on a higher time frame, and then once I have that confirmation, that's how you spell it, right? That confirmation, then head down to a lower time frame for an entry. And for an entry, we're looking for structure / another candlestick formation. And I just showed you guys that on this chart, where you saw that, on a 4-hour time frame, we got this tweezer top. So after that, now we can scale down and look to see what price is doing. And over here, we clearly got that. If you look way up here, we got that not shooting star, bearish engulfing, but price created structure when that tweezer top finished and ended, and it's easy to get in. It's easy to get in. Like, do not have a 2-pip stop loss or a 5-pip stop loss. Now, getting the stop losses, later, but that's not necessarily going to work, because you know how mad you would be if you had a 2-pip stop loss. Let's say you entered right here, right? The moving average crossed over and you entered this little, neckline of a sense, right? Price got this low, came up and it took it out, and you entered right here, and your stop loss was like short position. You entered right here, all the way to here, and your stop loss is like right here. You're gonna get stopped out. It's too close. You have to give your trade some room to breathe. So a few pips above here, good enough, or even above here for more breathing room. Great, perfect. Whatever your risk to reward ratio is, you keep it like that. You understand that. But the one thing that I can tell you guys that's valuable is when you see these candlestick patterns, forming at these psychological levels, make sure you are placing your stop loss correctly, which is below an uptrend, below where it printed, or above where it printed on an uptrend. If I can go to, let's go to GU, right? On GA, instead of GU, right? So when price gets here at this 177 level, this is why it helps to have these psychological levels printed on. Like, this is why I talk about psychological levels over and over and over again, because it literally tells you, it's the first sign you need to know that price is going to reverse. So knowing this, when price came down, look over here, right? Price came down, came up, created a lower high, came down, lower low. So what is the first sign that we need to see that price is going to reverse? Okay, some potential type of movement right here, right? This is not enough. This is enough right here. Why? Because this was structure, right? High, low, lower high, lower low. This just took out the last lower high, right? So that lower high is irrelevant now. So we know that, price is heading up. But when price is getting to this 0.78 level, candlestick patterns, right? What is it doing? Boom, bulldozers above. It's a hammer. This is a hammer candlestick pattern, right? Look at this. Boom, right here. And then price scales up. And now, there's no guarantee that price is going to get from 0.78 to 1.78 to 1.81. None at all. So we're not going to be like, oh, we're going to hold our trade for 300 pips. We're not going to do that. All I do is trade in levels. So 0.78 to 0.79, just like I said in the last video, what is price doing? It's too strong to just get to 0.79 and stop. So as I'm in this trade from that 0.78 and it's getting to the next level of 0.79, if I see price is still forming and it's still getting stronger and stronger and stronger, if I can just draw a rectangle around here just so I can clearly see it on a 15-minute time frame, right? Let's go over, look over here. I can delete it. we can see it clear as day that price is just getting stronger and stronger and just heading up and up and up and up and up. This 0.79 level is around right here. This does not look like it's slowing up anytime soon. Great. We know that it's going to get, you know, higher to maybe that 1.79 500 level or the 1.80 level flat. But always understand and keep in your mind when it comes to candlesticks as well is that when price is near a new set of 10 digits like 1.70, 1.80, 1.90, or for AUD USD like 0.70, 0.80, 0.90, those are a lot stronger, and if I can show my face for a second, they're a lot stronger than the 1.76s, the 1.77s of the world, because they can get hit, go up, go down, get hit, go up and down. When price gets to that new set of 10 digits, be very aware of what the candlesticks will do near there. So, you know, GA, we talk about 1.80 a lot, or GU, 1.40 a lot, because those are major levels that price is just not going to just barrel through. Like, it's going to stop, it's going to consolidate, it's going to, you know, move around a little bit until it breaks above those levels. You know what I mean? So the next note is, you can know all the candlesticks in the world, but if you inaccurately draw a trend line or don't have the correct levels on, even though like they're all opinion based, but you can really tell based on what price did in the past, which is how all the buyers and sellers kind of know where to get in or where to, you know, take their money out at, because they can look at the past and see where price, you know, hesitated or stopped at. Overall, if you don't have it, you know, accurately drawn on, you will be faked out by the candlestick being printed. Candlesticks have to be combined with other forms of technical analysis, which is what I talked about throughout this video, whether it's with psychological levels or moving averages or Fibonacci retracement or a trend line. It has to be combined with all of that overall. You can't just not have a blank chart with no, I guess you can, like everybody trades differently. I just don't see it. I can't do it. I literally can't. Like, if I don't have support and resistance on and looking at the overall, you know, market and seeing where I went in the past and seeing where it's going to go in the future, I can't really trade. I can't put too much emphasis on these candlesticks. Like, how do you know where price is going to reverse at if you don't have support and resistance, you know, drawn on there? You know what I mean? So candlesticks tell us exactly there's going to be a reversal. There's going to be a continuation. Just like you saw with that GA trade where there was a hammer right at a resistance level, that tells us it's going way up to that next level. But if you see a shooting star or a tweezer top, just like we showed you on AUD USD, that tells us, okay, price is going to reverse. Candlesticks tell us exactly, you know, what's going to happen with these reversals, but these psychological levels are literally halting price or giving us a better prediction in the future that is going to go up. Meaning, here, it goes up. All right, we know price is going to get to that next level. Now we're waiting for, you know, more structure to be created before we get in, or structure was probably created when it broke through that level and we don't need for it to necessarily retest because it did it on a 15-minute time frame. Great, now we're looking to enter. Now the next note is candlesticks are the first signs of price making a major move. You know what I mean? Like, these psychological levels will halt it and give us, you know, the overall picture. Once we see whatever bearish or bullish candlestick being, you know, printed, it gives us the first sign that it's going to be major. Now, sometimes after the candlestick forms, you won't necessarily have an entry. Sometimes the candlesticks will be too small, or there's just not an area for us to enter right there. Like, sometimes it's just a heads up that price is about to head in that direction, as immediately after it may retrace a little bit, like after it created that, you know, bullish engulfing, it may retrace a little bit before continuing with the overall move, creating structure. So let me just show you guys an example really quick. One. So with AUD USD, right? This right here is a evening star, right? Right at the mid level and the quarter level mid level of 0.77 500. If you guys don't know what, you know, quarter levels are, before I get to this example, it's basically just every 250 pips. So if I can bring my iPad down, you guys can see 1.10000, right? 1.12500. 1.15000. Same with, like, you know, AUD USD, it's like 0.70, right? 0.72500, 0.75000, right? Same thing. Blake Griffin agrees to contract buyout with the Pistons. Interesting. All right, so delete this, right? So just to keep you guys in the loop, so that 0.77 level, as you see right here, delete. You can see this is the mid level for that quarter level over here, right? 0.77 500, right? So we get this evening star right here, and then we get that confirmation going down, but then price immediately retraces, right? So knowing that, this is why it's important to see where price is doing overall. First of all, if you were to got in right here, that's perfectly fine. And I talked about this in my last 2 videos for the new academy, where I talked about getting better entries, right? There's no such thing as an absolute perfect entry. There's zero drawdown. Like, all these traders out there telling you that, they're all liars. Like, there may be an instance where you will get in and price immediately goes in your direction. Great. But the reason we have an accurate stop loss and a breathing room of a stop loss is because we have to anticipate some form of drawdown happening, right? So if you were to get in right here, because you saw this evening star right at 0.77500, right? And you saw this confirmation candle right after that. Great, that's perfectly fine as long as your stop loss has breathing room. If you got in right here and your stop loss was like right here, guess what? You got stopped out right after that. And then price went in your direction. And now you're contemplating if you should be a trader or not because you just got stopped out when you had a 2-pip stop loss. Like, you guys got to be realistic. You can't have a 5-pip stop loss and then get wicked out every time and think, oh, the market is against me. You had a 5-pip stop loss on GBP JPY. Like, be more realistic, you know what I mean? So when you have this entry right here, if you were to enter right here and price just goes up, it's okay. You can be confident enough that price is gonna go in your direction, which is what we talked about earlier. You know, being confident, all we're doing is speculating. Have your stop loss up here, right? And if price wants to get up here and stop you out, so be it. We're gonna keep the same discipline and trading plan over and over again, which means if we see a candlestick formation on a psychological level, I don't have my moving averages on here, but all the confluences in the world, we're going to take our chances and get in the trade. But if you wanted to wait, right, if you saw price get here, but it goes up and you wanted to wait for this break of this original low, right? Like, you know how we talk about the break, retest, and continuation, right? Price got down here, created some type of low, came up, we're now waiting for it to break this low, and it comes down and you break it. That's okay too. Like, that's more of a conservative, more relaxed way, and more of a confirmation way. That is perfectly fine too. Price goes down, gives you a strong candlestick, right? This is not necessarily a pattern, but it's still momentum where it has little wick. And before I get to my overall point, I want you guys to like the first thing I said in this video, look at the overall body in comparison to the wick. So back over here, if I see a candlestick pattern and it's just like this, right? Boom, 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 boom. It has all of this type of body, but the wick is like this and like this. That means there's so much momentum when it comes to this candle. This basically, if you look at this overall in comparison to the body to the wicks, how much percentage do you think it closed? This is probably 97% all body momentum, right? If you saw this, big wick, boom, 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 big wick. What do you think this is? Maybe 40% of the overall candlestick, right? Look at it in terms of that, right? You see this type of candlestick, right? And it goes like this, and it goes like this, boom, 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 and it goes like this. This may be 60% of the overall move, right? So understand that the less of a wick you see, the more confirmation that it's going to go up. Same with, this is why an evening star is so much of a confirmation that price is about to head down, because what is an evening star? We got a resistance level right here. We got a wick, and then we got nothing but, you know, a body, just like we saw with, you know, AUD USD over here. If I can show you guys really quick. Remember over here, that shooting star, right? Shooting star, no wick down here, but a wick up here, right? You got a wick up here. I'm trying to zoom in as much as I possibly can. Can't really zoom in too much. But you can see over here, there's a wick up here, but no wick down here. That gives you all the momentum in the world to tell you price is about to burst through this 0.79 level and go right to the next level, right? So if I can get back to my overall point, look at how big the wick is in comparison to the body. So going back to this chart, right? You see how this candlestick right here, if I can actually delete these over here, right? But you see this, it barely has any wick. And I don't want to block it. I want you guys to see this one right here, right? Barely has any wick. So it's telling us that price has the momentum going down. We not only got a, you know, evening star on a psychological mid-level, right? We got a lower high, and then we got price broke through this little neckline right here, right? And then it gave us, you know, structure overall by showing us that this has all the momentum in the world when it comes to a candlestick. Price could have easily printed, you know, nothing right here. It could have did, like, take away this for a second, this candlestick, right? And just imagine if price just did a bunch of dojis, right? This is telling us that, all right, this level is just holding firm, even though it's not, necessarily a major level. Our major level is up here, but it's saying this level is holding firm. Nope, that's not what it did. So all it did is, consolidate for a few hours and then just broke right through. And that breakthrough showed us that price is heading down. This didn't break through, this didn't break through, this didn't, this did. So pay attention to, when price is breaking these, levels. And the reason I said that is because my last point that I just had was, they're the first signs of a major move. Pay attention to what I said early on. Just like I said with AUD USD, you saw that tweezer top right at a level. You knew to get in. You knew to go to the 15-minute time frame and look for an entry to get in. But when we go back to this over here, right, this evening star, okay, you could have gotten in, right? You could have gotten in right here. But if you didn't, price just retraced a little bit. It's okay. And then when it gives that confirmation going down, get in. Get in. Like, more times than not, we take our chances, we're confident in our trades, and we go on from there. Now, if you miss your entry, just like I just showed you over there, it's fine. Price has to create more structure anyway. Once it does that, look to get in. So that's basically the point I just brought up with AUD USD. If you didn't get in on this evening star at this psychological level, or, knowing this was the last red move it made, so waiting for it to break that level, right? It's okay. Just wait for more structure to get in, right? Just wait. A lot of times I see traders, experience FOMO, which is obviously fear of missing out, and they just jump in and trade randomly. Price has to create structure. So back to my original overall point where I said, if price is in the middle of nowhere and it gives us no room to get in, I'm not looking to get in. I'm waiting for the next level. So I can delete this over here and give you guys an example. Look over here. Where could you have gotten in, right? Where could you have gotten in, right? Like, price just went straight up within this, 100 pip range. Price goes up, goes down, and then goes up, and then goes down. But where could you have gotten in right here? It's hard. So that is what I mean where it's like in the middle of nowhere. There's nowhere to get in. But over here, if you missed your entry, luckily price gave us a lower high, came down, another lower high, right? Any candlesticks that are forming in the opposite direction is a way for us to get in. So right here, another type of lower high. Okay, now we could potentially be looking to get in, scale to a 15-minute time frame and see if we see something. Look for the overall confirmation on the 1 hour, whatever it may be. But if you missed your entry, it is perfectly fine. Like, I'd rather you guys get in at the perfect time for you guys itself, not the perfect entry, but the perfect time when you guys feel I'm confident, I'm comfortable, I have a lot of confluences, I'm going to enter right now, end the story, let's see what happens, as opposed to you getting a call from your mans. Let me show you guys myself for a second. You getting a call from your mans or your girl like, yo, GBP USD just dropped 100 pips. Did it? Okay, boom, all right, boom, get in, all right, sell, boom, all right, hopefully I can get some type of money out of that. And it's like, you just did the worst thing you possibly could do. You got in when the move was already created. If somebody had told you that, and then you looked at your phone and price had already dropped, go back to my notes for a second really quick, right? And price had already dropped. Go over here, boom, 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 excuse me. Let me show my face really quick. Sorry guys. And price already, dropped. No, but if price dropped and you're looking at it and price already dropped and it starts to go up, then it gives you more reason to be like, all right, now I'm waiting for what? Some type of bearish candlestick pattern over here, and then I'm waiting for it to drop below, right? That's more feasible than price is dropping. You're like, oh, I'm gonna get in right here. Price already dropped 100 pips. What are you doing? So it helps to understand what the overall moves are. It helps to understand what your favorite candlestick patterns are when it comes to the market. Like I've been looking at this market and being a part of it for the last few years, and I love it. So I do have my select and my favorite candlestick patterns that I necessarily look for. Actually just did a video about candlesticks in my academy yesterday that I posted. So figure out what candlestick patterns you love and go from there. I only use the same 10 or 11. I just made that video in the academy. I wrote it all down. Boom, 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 boom. It's the same thing over and over again. I know there's some candlestick, books out there and articles that have like 100 and 150 different formations. I don't use all of that. If you use more than what I do, great. If you use less, great. It all depends on what you like and what works for you overall. Now, also, keep in your mind, a major candlestick pattern may not be prevalent on every psychological level. Like sometimes, most times, whatever it may be, there will be some type of candlestick formation at a level, but sometimes price just consolidates at that level and then slowly creates small candlesticks before one just, bursts right through that consolidation level. And that one burst is the hammer or the shooting star or whatever it may be. But when price is at a psychological level, don't just assume it's just going to break immediately or just create some type of pattern immediately. It may, consolidate a little bit and then create that pattern. So just make sure you're aware and make sure you're mindful. And it doesn't mean if it's, consolidating for 5 hours that, all right, I'm just going to sit and wait for 5 hours. A way I combat this is by setting alerts at every single psychological level around me when I'm trading. So when I get a text on my phone, I'm able to open my phone or laptop and see where the next few candles are showing me. So if I can go back to just the examples for a second, if this is a psychological level down here, right? If this is a psychological level down here and price gets down here, I do have an alert. Let's say the alert is blue, right? Right here. So when price hits it, I'm gonna get a text on my phone that says price is at, let's say 0.77, right? 0.77. So now I'm looking at my phone to see if I can get that type of bullish candlestick formation. If I don't get that and I get a bunch of candles that's like this, all right, then I'm just gonna create like a box around here. Let me actually make that box green, blue, right? Create a box around here. And what I'm gonna do is set a alert up here that says, okay, 0.77, 100, text my phone, text me whenever price breaks above. Because I know if price is breaking above this level, consolidation is consolidation for a reason. If you see consolidation, all it's doing is up, down, up, down, up, down, up, a little bit down, up, down, up, down. That's all it's doing, right? So it's easy to create a box around it. So that means I'm able to confidently put some type of alert up here because some type of structure or level is broken. So when price is doing that and it gets like this and it's just consolidating, if I can get right here, over and over again down here, right? I'm gonna place an alert. So if price does break above in the bullish direction, right? Some type of hammer, some type of candlestick formation, then it'll do the same thing it did when it was gonna get down here. Text my phone so now I can look at the market again and see now we broke above consolidation. Now can price come down, create a higher low, then go up, and then we can get a trend line popping. Like what can we do? And you guys have to, test things out, see what your overall foundation is, and see what works for you. What works for me is putting an alert down here at the level to see immediately is price going to break below. Like that shooting star we saw in AUD, USD earlier. If I can go back to it really quick, I would have had an alert right here. Sorry guys, right here. Right at this level. Then when it texted me, I would have saw, oh, we got these, a tweezer top on the 4 hour, then a clear shooting star with barely no wick down here, right near my 0.79 level. All right, I know it's gonna break below this level and get to the next level. But sometimes it'll get smaller candlesticks, right? And then just like it did over here, it got smaller and smaller and smaller. You know what I mean? Knowing that, I would have had an alert that would tell me, all right, just wait to see if a candlestick, can be presented right here. What type of formation can be shown at this resistance level, at this next support level? If I don't see anything, I'm going to get off my phone, try to place an alert like 10 pips above or 10 pips below, and then wait to see if it can hit it. And if it does, boom, I'm on my phone and I can go from there. So that is one way I combat looking at the market over and over and over and over again for a few hours. I don't want to, hurt my eyes. And I think it's funny when a lot of people say, if you're a trader and you're trading, how do you have time to make YouTube videos or help other people? And it's easy for me. I don't think it's easier for somebody who's like trying to help somebody one-on-one or one-on-two. It's harder in that sense. But in terms of a grand global scheme of things like YouTube, it's easy. I can trade, and then when I'm not trading, I can be on YouTube. Like trading is not a thing where you're trading for 2 hours straight just looking at the market or 5 hours straight just looking at the market. I'm placing my trade, I'm putting my stop loss and my take profit, and I'm walking away. For those more intense traders, they may be at the charts for 10 hours straight and blah, 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 blah. I have a life. I'm not about to do that. So my life is trading, teaching, basketball, my wife, and going from there. So And saying that, that is the reason why I use alerts, because I can't just look at the market 24/7 and just try to see what type of candlestick is being formed. Just like I said in my first overall rule, there's going to be a lot of candlesticks that are going to be shown up and down because they're on a daily time frame or a 4-hour time frame. They got to make up all of it, right? There are, just like I said in my first rule, there are a lot of candlesticks that are being, printed on a 15-minute time frame and a 30-minute time frame and a 5-minute time frame to make up the 4-hour time frame or the daily time frame, right? You got to understand that. So I'm not getting swayed by what it does on a 5-minute time frame or a 15-minute time frame. You know what I mean? So this is why I'm not just staring at the charts 24/7. I'm looking for the confirmation on a 2-hour or a 4-hour, even a 1 hour, to see the overall direction on what price wants to do the next 24 hours, the next 48 hours, the next week, the next 2 weeks, the next month, and then I'm trading in that direction overall. Some of y'all may trade differently than me, and that is okay. Keep that in your mind. Some of you guys like to trade as if it's a game and trade every 10 minutes and every 15 minutes and every 20 minutes. I'm not like that. I'm more of I know what price is going to do for the next week, trying to predict what it's going to do, and I'm going to trade in that direction. And some trades I may hold for a week straight. Some trades I may, just because I know it's going to get there by the end of the week, get in, and in every single retracement, just like I talked about in my Getting Better at Entries video in my academy, every single retracement, scale in, take profit, partial profit, get in, get out, get in, get out. Like I would do that, but it's in accordance with the overall trend, which I found on a 4-hour time frame. Now, another thing to keep in your mind is, for me, the same level of importance you put on your entries. I see everybody time and time again focus so much on entries and not anything else. You have to have the same level of importance as your entries, as your stop loss, your take profit, your risk to reward ratio, and the lot size you use, because stop loss placements gets overlooked. Like everything has to be as important. People, let's say for instance, I can put a psychology video out, right? And some people will watch it. I can put a chart work video out, like on the charts, and it seems everybody wants to just watch that. And it's like, you guys have to understand that you can have all the chart work you want in the world. If your psychology isn't right, just like with candlesticks, you can know all the candlestick patterns in the world. But if your psychological levels aren't placed on right, it won't matter. You can understand every single technical analysis tool in the world, but if your psychology isn't on right, if you're, over leveraging, if your risk to reward ratio isn't what it should be, it doesn't make sense in accordance with your overall trading plan. You know what I mean? If your stop loss is only 2 pips or 5 pips every time, or, if you have a stop loss over 10 pips, you don't know how to trade. People are stupid. They don't know what they're talking about, right? It doesn't matter how, what your entries are, because you can get some good entries every now and then. But then there's going to be some point in time where you're over leveraging and then you use a way bigger lot size than you should have, and then you blow your account. Or your risk to reward ratio isn't 1 to 3 every single time. So that means you have to win, 80% of your trades. You know what I mean? Or your stop loss is 2 pips every single time, and then you get wicked out, and then it goes in your favor, but you're not in the trade because you got wicked out for having too tight of a stop loss. So place importance on every single thing, please. This is important when it comes to entries and candlesticks and seeing overall what it does at these levels, but everything else is just as important too. So overall, some of the gems and the keys I made for this video is that understand that on a 15-minute time frame or a 5-minute, so many candlesticks are created to make a 1-hour time frame or a 2-hour time frame or a 4-hour time frame. So keep that in your mind. Don't let, a 5-minute candlestick that goes up here and then goes down here and goes up here and then goes down here, and don't let that sway you thinking it's gonna go down, it's gonna go up, it's gonna go down. Relax. For me, it's important to look at the candlesticks on a higher time frame and then scale down for entries. Another thing to keep in your mind is that I'm only looking for these candlestick formations at these major areas, the psychological levels, a trend line, a Fibonacci retracement. Those are, of the utmost importance to me. In my experience, I find that it only makes sense when price is bouncing off of those areas or breaking through those areas, and I can combine that with some type of formation. That seems to be what works for me. And again, I don't necessarily care how well you know these candlestick patterns if you don't have everything in accordance with it. Like if you don't have the accurate levels drawn on, it doesn't necessarily make sense because they are hand in hand. They have to bounce off of something. They don't just bounce randomly, right? If you just have a clear screen, you're just looking at the charts, It doesn't just bounce randomly. It has to bounce off of some type of support or resistance level, or break through if it's, you know, a continuation type of candlestick. Keep all of this in your mind. Make sure you can test it out and back test it for yourself. Again, these are my rules, and what works for me may not work for you, but you may also find out that what works for me, most of it works for you, or all of it. Just try it out, test it for yourself, see how these candlesticks react on these psychological levels. See if you can, you know, analyze it on like somewhat of a higher time frame. I don't care if you have a small account. People use the excuse all the time. I only have a $300 account or a $500 account. You know, why should I be looking on an hourly time frame? Because you're gonna get faked out over and over again by trying to trade on a smaller time frame. You know, finding an entry on a smaller time frame and trying to trade, like actively only have a 15-minute, you know, time frame, you know, opening and trying to trade off of it are two different things. And I found that you get wicked out a lot because you don't know the overall structure. You're like, oh, price went in my favor for 20 pips and then it just dropped all the way against me. But then you look back on a 4-hour time frame, you see it was in a downtrend the whole time. So keep that on your mind, back test it, try it out. I appreciate you guys for watching the video. If you do want to see, you know, more videos like this that's this long but in great detail, go to my academy, www.theswaggyacademy.com. I told you guys in the beginning of this video, I just released 10 videos just like this that the minimum time length is like 40 minutes, like 40 to an hour long, where I'm just releasing, you know, everything and doing, you know, 90 to 100 videos and just putting it for this new academy that me and the developers are, you know, currently creating right now that should be created within the next few weeks. The old content, still deciding on if I want to archive it and keep it, you know, somewhere within the new academy or just get rid of it as a whole. But I know these new 90 to 100 videos, if you like this video and you like the last moving average video and you like the Fibonacci video on YouTube, you know, before that, you're going to love this new academy. I'm trying to find a balance, you know. Everything has been, you know, tried and tested over time. Shorter videos, medium-term videos, but now a lot of people have been asking for longer videos and just in detail overall. And with this new setup, with also not just sitting here for an hour long straight and everything is just done for me, it's a lot easier for me to create them. So you guys will be excited for the new academy. There's not going to be a sale right now. Like that was just for the 1-year anniversary. So if you're interested, www.swaggyacademy.com. If not, feel free to continue to watch my, you know, YouTube videos. I'm not guaranteeing that I'll post YouTube videos every single day or even every other day, but I'm going to try to get content out when I can. Overall, I appreciate you guys. And as always, gang.